Hey guys, it's Max. How's everyone doing this morning? We aren't going to have the normal update on the Defiance stocks because the spreadsheets are still messed up. Let's look at USOY really quick. The USOY part of the update still works. For whatever reason, about a week and a half ago, Google Finance quit giving me prices on the SPX and like 5 other stocks, one of them being WDTE, which is JEPY, and a few other yield max stocks. And that's all, and everything else worked fine. So I tried to find the answer to that for about, a few weeks, and turns out when you have sheets as they get bigger, sometimes they do that. So I thought about just scrapping my Google Sheets and starting over, but I don't want to lose all that data. So I thought it'd be a good time to go to Excel. Excel has a lot of features. And anyway, so that's what I'm trying to do now. All right. So these guys, USO, they sold the 72 strike option for $2. These guys are having a pretty decent, well, this part of this isn't working also, but these guys are up, about $1 million on an not earnings per share, about $1 million on an earnings basis. I have a dividend estimate of between $1.36 and $1.50. And I know that seems high, but these guys have been knocking it out of the park because oil volatility has been extremely elevated lately. Now I see that oil is up today, but oil vol has just been super elevated. All right, well, there's the 30-minute chart. So, and there's actually the profit boxes. So last week they had the 75 put option written. So that's a bullish trade. And actually the, USO kind of meandered around and they made most of their money. But let's actually see how much they did make. We actually have it right here. So the spreadsheet just doesn't work on SPX, on Google Finance. So if it's SPX and like 5 other yield max stocks, everything else works fine on Google Finance. So like in USOY, it easy, works just like it always did. I just thought it'd be a good time to switch to Microsoft Excel because it's more powerful and it does, it has better charts. And so I would love to, so I took all weekend to try to transfer us over to make hopefully a better experience for you guys. But anyway, so these guys, they sold the 73 for $1.50, but they had to buy it back for $2.15. Okay, but then when they did buy it back for $2.15, they immediately got $2 of that right back because they wrote the 72 strike option. They rolled down from the 73 to the 72 essentially. They did, and right here, and I guarantee you they rolled right here. To lose money on this 73 strike option, they probably decided to roll as the market pulled back, I'm guessing. Because if they would have waited till expiration, it looks like they would have done a little better, but that's woulda, coulda, should have. So it's more like this. Okay, but anyway, now this is full profit. So we'll keep an eye on that. So yeah, but I thought we could also update the other stuff we could update. I've been talking about arbitrage in the election, and I can still talk about the ULTY trade. ULTY is really interesting, I think, now that they're doing the new strategies, and we'll talk about that. So I'll talk about what I can talk about. But as far as the Defiance part and the dividend, specifically the dividend estimating, it won't work on Google Finance. So then I tried to switch everything over, and same thing with Excel. Excel doesn't work for other reasons. So, so let's look at ULTY. Now this is the new yield max ETF, or not new, but they're doing a new, they did get a new approval from the SEC for a strategy change. It's a new strategy ETF. And I went through their options yesterday, and I put, let's see, I think I have 1, 2, 3, 4, 5, 6, 7, 8. We have 8 trades to look at real quick. So let's look what these guys are doing. They're doing some interesting stuff here. So This trade is not working out great for him so far. So what Jay did here, he bought 34,000 shares of Tesla, simultaneously did a covered call. He sold the 230 strike option for $3.18, but then he turned around and bought the 342 strike call, same expiration, for 87 cents. You can see they did this for a credit of about 78,000. That'll go to pay the dividend, and then they're hoping the price of the stock goes up, not down, and that will go to the NAV. So we'll see. Now let's look at this real quick. Let's pull up a chart of Tesla. Okay, well, it's pulling back a little bit today. It pulled back this morning. Let's look at it on a bigger time frame for these ULTY trades. That 30 minutes doesn't do it justice. That's better for those daily options that aren't working right now in Defiance. But for what ULTY does, they're doing more of like a swing trade type stuff where they're looking beyond just the end of the day. So, all right. So there we see Tesla gap down on that big, was that the robo-taxi news that came out or something? But in any event, you look right over here and they have earnings tomorrow, of course, right? Okay, so now these are the last earnings estimates right here. You can see they've been missing a little bit, but just barely. This is interesting. It shows you we'll talk about this some other time, but this shows you the term structure of their option contracts. So, but in any event, what Jay's playing for most likely is them to announce earnings tomorrow and for this to have a pop. Now, how do we know that? Because we can look at here's the option trade Jay did. He did the covered call spread, and here's the profit. That's the profit and loss graph at expiration. Here's the profit and loss graph, after earnings. What he'll do is he'll take it here to Wednesday or Thursday, where this is basically just a straight line, just basically the same thing as having stock. So what Jay's done is he's essentially made just a bullish bet on Tesla, but at the same time still brought in a credit and is able to pay a dividend. But that's the thing I'm so excited about these covered call spreads. They don't give up a whole lot on the upside, especially when he rolls early. And the earlier he rolls, the less they give up. But what you're trying to avoid in any option trade is this flat spot. That's where you have the worst relative outcome relative to somebody that just had stock. So, but you can avoid that. And that's basically what Jay's done. He synthesized stock, but he's found a way to pay a dividend out of here. With this latest strategy, it wasn't always that way on YieldMax. What they were doing was interesting too, but it was a totally different deal. The profit and loss graph of what they were doing looked like that, and that's fine too, but this way is a whole different way. So now we'll look at the other ones. Most of them just have the same strategy as this, but this is a good strategy. But basically, we're just rooting for higher prices on all of these stocks. So higher prices on Tesla. So that's the one problem I could think of with ULTY is it's long only. Even though they can do anything in the options they want to do, it's always the base. As a base, they're always long. These trades are always long delta, which is fine as long as the market's going up. All right, so we have Tesla. We have, this is a really interesting one, TLN. Have you guys ever heard of TLN before? Okay, so he just did a put spread on this, but I've never heard of this one, but this is a fascinating company. It's called Talon Energy, I believe. Talon Energy engages in the operation of power infrastructure, produces and sells electricity, capacity, ancillary services into wholesale power markets through its subsidiaries. Company was founded and is headquartered in Houston, of course. Like I always say, energy companies are always in Houston. Energy or oil, it's always in Houston. All right, so but this thing looks interesting. Look, this is just a straight up rocket ship. Look at this daily chart. I mean, look at this thing. From 40 to 180 in what? 6 months. Okay, and it just recently had a pullback, so maybe Jay's thinking it's not as high as it could be and playing for going to a new high. And anyway, let's just see how he expressed that opinion. What he did is he didn't even buy any shares. This is the only of the trades that he did not buy shares. He just sold a 175 put. This stock's trading around 180. So he sold a put that's a little bit below the money. But then he bought a put, a 155 underneath that, and that caps his max loss. So this is a trade, basically, it's just a short put. It's a short put spread, so no stock. The most this trade can lose is $300,000. The power of this trade is, look, to make this trade lose, the stock would have to drop 7.4% from here. So it's a bet on this. It's just a bet that this stock doesn't drop 7.4% or keeps going up or goes sideways or whatever. But anyway, this one's interesting. Look at their last earnings reports. They've been blowing out earnings, and guess what? They got changed by Barclay to overweight yesterday. And also, they have earnings coming up. They have earnings coming up on, but not for a while, not till November. But this looks like an interesting company. So TLN, we'll keep an eye on that one. Now, the next one's really interesting. It's called SMR. Now, SMR, they're in the small modular nuclear reactor business. Supposedly that's going to be a big wave of the future, and supposedly it's going to help. Supposedly it's going to help with a bunch of things. Who knows? But this has a pretty interesting stock chart too. Now, as far as the trade, Jay just did a covered call spread. So, standard, you guys are pretty familiar with that trade, but let's look at SMR. Look at that thing. It just broke out to a new high, 3 days ago? And to me, it's popped back and it's back tested the breakout. So we'll see. Anyway, so I think Jay on this one is just playing for this to stay bid, So, but also doesn't have any capped upside. It's only a $17 stock. So wonder if it's New Scale Power is the name of it, SMR, New Scale Power. I wonder if this thing does mount a rally here. Look at this. So, of course, once again, he's not going to hold it to get the flat spot on the chart. He's going to flip it before then, but wonder if this stock does make a huge rally or something. I mean, you could see that upside's unlimited. So that's what we like to see. All right. So that's SMR. That's an interesting one to look at as well. Then he has MSTR. You guys are familiar with MSTR. Now he has an interesting trade on this one. It's basically his call spread, but he ladders it. And it's partial. He owns 100,000 shares. 40% of the shares he wrote covered calls on at 205. The other 40% another 40% he wrote at 215. So he has 20% of his stock unencumbered by calls and can just go as high as possible, unencumbered by short calls. In addition to that, he bought some call options at 225. So he's double, triple long above 225. So this trade is super bullish. So, and of course, this is a bullish play on micro strategies. Let's pull up that chart. Okay, look at that thing. That's, speaking of, it just did the other day what it just broke out from its, from a long-term base, pulled back 3 days ago and retested the breakout successfully, evidently, and it's now moving back up. So, but lots of times they pull back right to where they break out at. So that's an interesting one. Now that's the way he did it. He has this mainly just 105,000 shares because he doesn't even have all the options written. So he has 20,000 shares he just owns straight long. So, it's just a bullish bet in micro strategies, basically. All right. So then what else do we have? Talon. Upstart, UPST. Same thing, covered call spread, looking for higher prices. Looking for higher prices on all of these. Look at a similar pattern. This pattern looks similar to some of the other ones we've looked like, but this is a breakout after breakout. Look down here when it broke out. It came back. What did it retested right there on that day? Perfectly the old breakout. Then right here it broke out It hasn't come back and retested this one yet, but don't be surprised if it does. All right, so that's Upstart. These all look like they'll be fine as long as the market keeps going up. All right. So then from last week, I have a Netflix trade and an Inphase trade. This Netflix trade was interesting, so we're going to look at this. This is probably the most interesting trade of the bunch. This is also super bullish, kind of like the MSTR trade. This is like double, triple bullish. I mean, this is an aggressive trade. What Jay did here is he owns 14,000 shares of Netflix. And that's, pretty aggressive by itself, just owning shares at Netflix. But then in addition to that, he sold the same number of put spreads below the market. So that'll bring money into him. Okay. So then he turned around and spent some of that money buying call spreads in addition to being long, not selling covered calls, buying call spreads. So he's selling puts to buy calls in addition to being long stock. This is bullish, super bullish. And so far it's working out. But the point of it is the whole thing was done for a credit. He sold the puts for more than he bought the calls for. And he happens to own the stock as well. So it's a super bullish trade done for a credit. They'll take that $90,000 credit, split it up amongst the shareholders and play it, and pay it as a dividend. That's how the game works. So let's see. So that's from last week. Then we also had, let's look at Inphase. I think this is Inphase. I think it's Inphase Energy. I don't know. This one, Jay did a caller trade. That's where he owns the stock and he sells the covered call. Then he uses part of the covered call proceeds to buy a put. That makes it where they can't lose down to zero anymore. The stock goes to, whatever. The most he can lose is down to 79 on the stock price. And right now the stock's trading at 90. So it turns this trade into like 20 points of risk into 90 points of risk. Cut your risk by 4/5. Okay. So that's a nice idea too. We'll see how these work out. He's just been doing these new exotic trades for a couple of weeks. Some of the positions in ULTY still have on just normal covered calls. So maybe he's going to stay with the normal covered calls for some stocks. And for some, he's going to do these covered call spreads and these more exotic trades. I don't know. The jury's still out, and the jury's still out on how it works and everything too. But I'm damn sure going to be covering it. Okay, so let's talk election now, or let's talk, and we don't really talk election. We're talking arbitrage or game theory. I'm going to show you guys how to bet on both sides of something and make sure with math that you come out ahead in either event. And also you have to make sure to consider for outliers. I bet you other influencers won't coach you about the outliers. You'll see what I mean. We'll see. Okay, now this is the good news about Excel. I did get a sheet built for the election in Excel. And and Excel works great. If you don't need a price on it, it just won't pull prices on the stock market on some stocks for some reason. Okay. But other than that, it works wonderful. So let's look. First, we're going to start with the different markets. Let's look at Poly Market. And we'll look at Predicted. Okay. So in Predicted, Trump is 59. In Poly Market, he's 66. So if you're a Trump fan, you would bet him in Predicted because you bet 59 on him at Predicted and you get $41 back. Whereas you have to bet 66 to get $34 back at Poly Market. So that's fine. So a person, and that's what my spreadsheet figured. It figured how much you could make if you bet President Trump at Poly Market. I'm sorry, at Predicted, and then you bet Camala because his odds are too high. I'm not saying anything about the quality of either of them. I'm just saying the odds on a numeric basis relative to each other are too high at Poly Market based relative to the other one. So this is how we're going to take advantage of it. We would play her at Poly Market. So let's look at the spreadsheet. Okay, so I put in the current odds this morning. So this number down here, 1.66, that's how much you get on your money back if she wins. So if you bet $1,000, you get 1,666. Notice the triple sixes in there. So what does that tell you right there? See, and I didn't even notice that, but that should tell you something right there. All right, but if you bet 100 on him, you get 76% of your money back, kind of like 1776, right? That should tell you something too. No, I'm just joking, guys. But that's the math is what the math is. So let's do this. Let's do it from the standpoint of somebody that thinks both candidates have a 50% chance of winning. They think it's a total toss-up. They just want to risk equal on either side and make a little bit of money no matter who wins. Okay, we could do that. We would bet 66 on Camala. And we'd have to bet 100 on Trump and bet 66 on Camala at Polymarket, 100 on Trump at the other place. All right. And what that would do is if Camala won, God forbid, if she won with a 66 would return $110. Okay. But the Trump bet would cost you 100. So $10 profit. Okay. But if Trump wins, you'd lose the $66, but that 100 would turn into 76, right? So you would make about $10 there also. Now, $10 doesn't sound like that much, but it's 6% and it's 2 weeks, so it's not bad at the same time. And it's free money as long as one of them wins. Now, but the problem is, let's figure out, wonder if it's not one of them. Well, let's consider an outlier. Wonder if, the Dems pull her and put in Michelle at the last moment or something crazy like that. I don't think it's a strong chance, but let's say we say there's a 1% chance of something crazy like that happening, because we have to figure that. Let's see if there's still a profit in here for us to be made. But let's say other than that, we think it's 50-50. All right. So that's why it's important. So what you would do here, this would be this from the standpoint of, this is it. All right. This is from the standpoint of someone that someone thought it was 50-50. That's the sad thing. You wouldn't even really win. I'm sorry. Okay, here's how the math works out for someone who's 50-50 on it. 50-50 with a 1% outlier chance. We have to figure that in and say, hey, is this still worth doing? Do I still have an edge in this trade? Okay, so what I did is I multiplied how much the person would win on Camala and what chance there was. So we multiplied, I took the 1% out of Kamala's side. So I multiplied 0.49 times 10. That equals $4.90. Now, then you have a 50-50 chance of Trump winning. So you multiply 0.5 times 10.27. That equals 5.13. Okay, but then you have to do the 1% of losing both, which would cost you $160. So that 1% equals negative $1.60. You add all those up and there's $8.43. On average, you'll make $8.43 per unit. So yes, the answer is probably at a 1% chance. It is, you do still have enough edge to do something like this. But let's say that you thought it was a 5% chance. I mean, it's just important to have these kind of things. That's why I built this spreadsheet, to be able to show. So if you thought it was a 5% chance that happens, that eliminates almost all the edge in the trade. That makes the average profit in the trade just $1.50 now, over multiple occurrences. If it was any more than that, it would probably turn it to negative. Okay, so I'm going to leave it at a 1% chance there. I think 1% is about maybe 2%, but I think 1 or 2% is a proper ratio. So now let's figure this out from a Trump's fan a Trump fan's point of view, let's say that you think it's 60, that you really think, not really so much a fan, but you really think that, hell, I think it's 60-40 Trump at this point. So what we'll do is we'll do 60-39 Trump and then 1% outlier. So, and we'll figure the edge in that trade. So yeah, if you thought it was, even if you thought it was 60-40, of course you're still edged in the trade, but you aren't making as much as you should. If you really thought it was 60-40, a person should adjust, and this is true in options also. In game theory, you should bet more. You should risk more. So no Trump guy is going to want to bet 50-50 and just break even. If you really think it's 60-40, a true Trump guy is just not even going to bet on Camala. But let's just say you're a Trump guy, but you think it's 60-40. So let's do this. Let's maximize the Trump outcome and just go for break even if Camala wins. So what we would do there is 100 on Trump. We'll stay with 100 on Trump, and we'll just go 60 on Camala. Look at that. 60 on Camala breaks you totally even if Camala wins. All right, but your 100 on Trump makes you $76. So you make $16 there. And if you really think it's 60-40, or a lot of people, if you think it's 100 or whatever, but if you're more on Trump's side, you could do this also. Now look what this will do to the odds. So we still have to figure out the little matrix here. So Camala would be 0 if she wins, but now we'd put in for Trumpy 16, what was that, 1627. All right, and now we have to figure out the odds and make sure it's commensurate. So we think 60-40, so that's, or no, we think it's 60, we think 40-60, I guess. I mean, on this chart, it's 40-60. Oh, gosh. Okay, so we even have more edge in the trade, and which is what we were going for because we put more on Trump, and that's more what we thought was going to happen. So you could see, 40% of the time if she won, it'd be 0. So 40 times 0 is 0. But then, 60% of the time you'd win 1627. So that comes to 953. Then you figure out your outlier. Your outlier is $1.60. So that still comes to almost $8. So that would be the way to play it for a Trump guy, would be 100 on Trump, 60 on Camala. If you were just neutral, you would go 66 on Camala. Now, let's say you're a Camala fan. Let's say that my sister's watching or something. Or let's say that you think let's say you're a conspiracy guy and you think they're going to give it to her anyway, regardless of what happens. Okay, so here's a way you could handle that situation. Let's change the amounts that we're going to bet. Let's bet more on Camala, still 100 on Trump, but let's go like 75 on Camala, 100 on Trump. Now let's do 80 on Camala. Oh, that's okay. Yeah, that's hurts me to say it. 115. All right, that's pretty close right there. Okay, so that's the play. 77. If you're a dim, or you're on the Camala bus or whatever, think she's going to win. You play 77, but you want to hedge it also. You play 77 on her, 100 on Trump. Trump wins, you get your money back. If Camala wins, you make $28. And it's because her odds are longer. That's why you make a little bit more on her than Trump. But you actually make $28. So let's switch these numbers down here in our little matrix, our odds matrix. Okay, so on this one, you're a Camala, or Camala person would make 28 up there and then 0 down here. Okay, but a Camala person, let's say they're 60-40 Camala. They think the true odds are more like 60-40 or 60-39-1, whatever you want to look at it. Okay, that would be the best mathematical play of the bunch, because that's an average profit of $15. Because 60% of the time she wins, 60% of the time you're going to make $28. 39% of the time that he wins, or the outlier comes, well, that he wins, you make $0. The outlier comes, $1.60. So that one right there is for Camala fans. So it goes 66. It goes 60, 66, and 77 are the three numbers. If you're a Trump guy, but you want to hedge, 60. If you just want it even, 66. And if you're a Camala person, 77. But in all of those cases, you bet 100 on Trump. Yeah, $16 isn't very much to make, or whatever, $28 in this case, for sure. Just add a 0 to this, and it's $280. And that's not a whole lot either, but add 2 zeros. Okay, it's the only thing you got to worry about is the outlier, but you lose $1.60 in the outlier this time, but you add a 0, you lose $16. You add 2 zeros, you lose $160. You add 3 zeros, you lose $1,600. But at the same time, if you add 3 zeros, you can make a pretty nice little penny too, So anyway, I thought this was interesting. Okay, I hope you guys like that. All right, so let's see. What else should we talk about? ULTY, Trump, Camala, arbitrage. And all right, well, I guess I'm going to go back and try to fix whatever's wrong with my spreadsheet. But appreciate you guys for sticking with me, the ones of you that still have. My station just isn't doing very well since I started having these spreadsheet problems. A lot of people tune in just for that estimate. So if there's any, if there is any Microsoft people out there, and I doubt there are, and I doubt there are still, but if there's any Microsoft people out there, I want to show you real quick what the problem is. Okay, so here's this. So I rebuilt all these spreadsheets from scratch. This is my defiance. This is WDTE. It may not look like much, but it took all day to do this. The reason it took all day is because they don't support SPX quotes out of the box. You have to do a workaround, but great. I found a workaround. You do this little symbol, GSPC, then there's another one. You do this symbol. Anyway, some people gave me a workaround. So I did it last night. I was up till like 1 o'clock in the morning. I got it. Then I woke up this morning. Google's working, or not Google. The XDTE is working. S&P 500 one is working perfect. Okay, so that'd be WDTE, not XDTE. WDTE works like a charm. There it is. It's still working. The logic, everything looks great. I go over here to triple QI, and it's showing that points in the money, that this option position's 1,800 points in the money, which would mean the market's crashing, which would mean it's getting killed. I mean, that's not reality. It's not anywhere close to that many points in the money. So, and like that was after staying up till 1 o'clock in the morning. So this was this workaround that people told me, it actually does work for S&P. That gives you the S&P 500 quote. This right here gives you something called the NASDAQ composite. NASDAQ composite is not the NASDAQ 100. They're different by a couple of thousand points different. This would work for 99% of the people that are just want to, but it's not working for my specific case. So I have Excel that works otherwise, but will not give me a NASDAQ quote. And then just by coincidence, Google Sheets works kind of otherwise, but will not give me an S&P quote. This is the main and the first thing that broke, and it's still broken. That right there, it will not give me an S&P quote. And I've tried to troubleshoot this for like 2 weeks before I even decided to go to Excel. And then in addition to that, there's like 5 or 6 other stocks it won't give. But everything else works on this one. So I have some stuff working on one, some working on the other. I guess maybe one of these days I'll get it figured out. All right, guys. I appreciate y'all for being here. Have a good day.